Hi, everyone. Welcome to the 150th episode of the Timing Research Show for August 21st, 2017. My name is David Kosmitter. I am the creator of Timing Research. Today, we will be discussing the 204th weekly report. So if you haven't had a chance to take a look at this yet, you can go to TimingResearch.com and download it there. You also should be seeing it on your screen right now as I'm talking. Also, for those watching live, you should be on the YouTube page. So there is the live chat section that you can type in comments or questions if you want during the show. And I have Dave Landry back to host today, so I'm going to go ahead and turn it over to him.
Thank you, David Kosmitter, for having me back again, and congratulations on 150 shows. I know I was part of some of those. Thank you to Timing Research also for having me on today. We're waiting on Anka Metcalf. She's having some technical difficulties getting in, which sometimes occur with TradeOutloud.com. So as soon as she comes in,
I think
she's coming in now.
Okay, I'm here.
All right,
Sorry, guys.
just fashionably late. We're just getting ready to talk about you. So
hope good things. Okay.
Oh yeah. Well, Anka Metcalf with TradeOutloud.com. For those of us, she's a veteran of the show, but for those of us who don't know you, tell us a little bit about yourself, about Trade Out Loud.
Okay, hi everybody. Sorry I'm late. I had some issues with the computer, but anyways, my name is Anka Metcalf, and I have been a professional independent trader for about 14 years, actually more than 14 years, and I specialize in equities and futures. I swing trade equities and I day trade futures for only two and a half hours a day. Before becoming an independent professional trader, I have 10 plus years in investment banking. Also, I'm the CEO and founder of TradeOutloud.com, which is a training education firm that specializes in educating individuals how to day trade and swing trade and actively invest the futures and the equities market. We also offer a wide array of services like coaching, personal mentoring, and also a signal service, both for equities and for futures. And I'm the designer of an institutional proprietary trading system that is based on price support resistance. And when I'm talking about price support resistance, I'm talking about multiple layers of support resistance. So not only supply and demand, that's only 30% of the equation. Also specific trigger times throughout the day, especially if you're a day trader, specific price zones that apply to day trading and swing trading, chart correlation, a strict set of trading rules that enable myself and my students to have patience to have patience waiting for the trades, to have patience for the patterns to align, and also a 10-point scoring system that enables me to find trades with ease. And when I'm talking about trades, obviously we're looking for higher odds trades, low risk, better return. So that's about a little bit about myself. So thanks so much for the intro, and thanks guys for waiting for me.
No worries, glad to have you. All right, Kristen, let's go to you next. Kristen Fromhertz from TribecaTradeGroup.com, another veteran on the show. In fact, everybody's a veteran here, so welcome everybody. But Kristen, tell us a little bit about yourself and your trading and about Tribeca for those of us who don't know you.
Sure. Thanks so much, Dave. And thank you, David, for having me on again. It's always a pleasure to be on the panel, and always great to hear different opinions on where the market's going as well as trade ideas. So a little bit about myself is I started institutional trading back in 1998. I was a financial advisor for some time, and then I moved over to that was on the retail side, and then I moved over to institutional trading over to Merrill Lynch, where I was a senior trader in ETFs and Delta One products. So really what I did at Merrill Lynch is kind of what I'm doing now, and I started up Tribeca Trade Group a couple years ago. And my approach to trading and why I love ETFs so much is it really gives a macro trader just a lot of tools to kind of find trends and to trade those trends. So what my approach to the market is to look at global markets, find out if we're in an uptrend, downtrend, and then try to capitalize on some of those trends by either trading some of the bigger indices or drilling down into single name stocks. Really, wherever there's opportunities in the market, that's where we go. So during the day, what I do is I run an all-day trading room, and we manage 2 portfolios. We look at option flow all day long. We capitalize on really sharp, aggressive option flow when we have it, which it's been a little bit of we've been without it for a couple days, but we'll get into that. We're basically just kind of sitting on our hands a little bit. And then also, besides options, I also run a systematic cash trend portfolio where all of Tribeca Trade Group subscribers can see how we trade and manage that on a day-to-day basis. So again, thanks for having me on.
Cool. Glad to have you back again, Kristen. Michael Filighera, let's go back to you, or go to you, I should say, from LogicalSignals.com. Tell us a little bit about yourself, for those of us who don't know you, and a little bit about LogicalSignals.com.
Well, I'm going to tell you to start, I'm going to feel like I'm the grandpa in the room. I started trading options as a market maker on the Pacific Exchange in 1979. Yeah, so I'm definitely feeling like the grandpa here. In any case, I've traded here in San Francisco. I've traded on the London Traded Options Market, Amsterdam European Options Exchange, and on the German DTB. Before coming back to the Pacific, I decided to go off floor when everybody decided that everything was going to go electronic. So I continued to trade, but basically just, for myself here in my home office. LogicalSignals.com has in the past operated along with a trade room, and I've also provided some daily looks at particular trades that we may have been doing. The focus of my trading is now day trading. And as those who have heard me before here on the show, I go on a basis of I don't really care. I don't care about the who, what, where, when, or why on in the market, simply because as a day trader, I've come to realize that the markets are being controlled by other algorithms that are just searching for trades. And it could be an option algorithm that's actually going to pull an option trade out and then hedge it with either the future or the underlying, et cetera, et cetera. And this to me has been more of the tone of where trading has been going for the last several years. So in order to really participate more than anticipate, which is one of my key phrases that I like to use, I have started to have algorithms written for me and that I offer through the website, LogicalSignals.com. But it's to just really capture the moves that are happening intraday. I am definitely a day trader. I don't care. I have core positions that I do carry, but I don't include them in how I trade on a day-to-day basis. So day-to-day, we come in fresh every day. And so we're not really looking like we've got to cover risk, or we don't have overnight risk in our trade room positions. I'm switching the trade room around a little bit, where I have felt that many people still really want to have, as Anka so appropriately stated, coaching. So in a way to really kind of provide some stronger coaching for experienced traders, newbies, the whole line of where people are in their experience, I believe is due to one-on-one. So I'm starting in the trade room where each person would come in and it would just be me and them for an hour or however long that they're going to book time for. And I think that what that's going to allow is I also do a lot of work, and I do a lot of on the psychology of trading and what emotionally comes in and affects us as traders. And so when we go into trade, if I find it much easier if I can kind of be a mirror to that trader, so they have the camera. So in other words, I can see them, I can see their expressions, I can see where they're going emotionally, and really work out a lot of kinks and problems that I think traders have. So that's the new plan that I have for LogicalSignals.com. I will continue to hopefully write on my opinion of what I saw happening on that particular day and where the better trades took place. So that's it.
Cool.
Thank you very much for having me on.
No, I'm heavily into psychology as you mentioned also. And I think you're definitely onto something with the one-on-one, and some more recent research that I've been doing was from Dr. Robert Marr, and he's not a trading psychologist or anything. He's just a psychologist, and he talks a lot about the fact that we're not really made to operate alone, going way back to the hunter-gatherer phases and all. So maybe you and I could exchange some notes on that, but the good stuff there, and that's something I've been trying to wrap my head around lately, is like how to maybe connect people, and you have to realize that nobody does it completely by themselves. We all have help along the way, and we all studied the markets and read books and everything else. So nothing wrong with reaching out a little bit. In fact, that's probably the best thing you could do. For those of you who don't know me, Dave Landry from TimingResearch.com. I'm not quite as old as Michael, although Michael, you are very young looking. You must take care of yourself over there in California. But I stopped counting at 20-something years in the business. I have worked with several hedge funds throughout my career and thousands of individuals through TimingResearch.com. I have an educational business also, and I do actually have a signal service on top of that, which I provide. I think that, well, I know that the only way you can make money in markets is to capture a trend. When you boil it all down, you must obviously sell higher than you buy or cover lower than you short. So I'm a true believer in being a trend follower. And you can only predict the short term when it comes to markets, no matter what anybody says. Nobody knows what's going to happen longer term, as I often say, not you, not me, and certainly not the guy who screams on TV. But the good news is you can stick with positions as long as they move in your favor. So I have a bit of a hybrid approach to my money management, where I get in with the hopes, and I know I shouldn't use the word hope, but hopes of staying with the position longer term, but I'll take off half of that position for a swing trade. And then the secret sauce is to let the stop widen out, to trade with short-term risk and short-term volatility, but then let that risk open up a little bit in the form of a stop, but then compensate by taking the partial profits. And most everything I'm talking about now is you could get on my website for free to get you up and running. You can click on the Get Started on my website, or you can go to, and I'll put the link in the chat here, you can go to, it's kind of a long link, DaveLandry.com, easy for me to say, Timing-Research-Special Offers. And then there's a $100 gift certificate there if you, and you could reuse that. So if you wanted to get all three of my books, that's all, you can get that all for free off of my website. Anna, we to go back to you. And the question, obviously the first question this week, is which direction do you think the S&P index will move by between Monday's open, obviously, which already is open, and the close on the 25th of Friday, and then rate your confidence in your answer to the question by estimating the probability you have correctly predicted it.
All right. Well, that's a tough one because during the summer period, I'm going to take it like one day at a time. And like you've mentioned, you cannot make long-term projections. I mean, it would be crazy for us to think that, okay, it's going to move up, it's going to move down. All I can say is that, number one, we lack the catalyst for this week. So we don't have a lot of elements. All we have by looking at the calendar is Jackson Hole, and that starts on Thursday, I believe. So we have a very dry calendar, some home sales here and there. So very little things that are happening. And not only that, but the technical charts right now, let's take a look at the overall chart pattern. They're long, like we're in a very strong trend still. So even pullbacks, even more severe corrections, they're still not going to destroy the patterns because the patterns are just very, very strong. This has been a news-driven market for so many years now. It is really hard to beat up. And I don't believe in short positions and aggressive short positions. I don't believe in finding tops, or I don't believe in like finding bottoms in the energy sector. But when it comes to the the S&P right now, we have been pretty neutral on the day today. We have been pretty neutral on the daily chart as well, into Friday's trading. So that pulled back a little bit, but we're still, when we're talking about the S&P, I'm still looking at the technical levels, and I still see that 2400 area is a huge number. Now, as far as we're going into this week, and then all I can say is that if, let's say, we break hypothetically 2450, I would be inclined into having the price react to the upper side, perhaps into the 2475, perhaps into the 2490. I can't guarantee what will happen, because you know that the market is probably directly connected to Washington D.C. So any rumor that is coming out of there can literally take the market by storm to the upside or by storm to the downside. Algos are kicking in. They're like washing all the stops out. It's like clearing the market and starting from scratch back again. So I'm going to be very neutral. I'm 100% neutral. So if that should be the case, I'm like 100% neutral, because I see 2400 as a huge support area. As long as we hold that support area, I still think that we should be bullish. Perhaps, let's say, a smaller pullback into the 2400 would be possible. But like I said, 50-50 either shot. So extremely neutral. I think this is not a swing trading environment by any means. And to be very honest, I don't have any swing trades on right now. I don't even have any active investing trades on going out right now. So I'm cash, and all I'm doing is some futures trading. I actually closed a short this morning at 3:30 in the morning in the S&P short, and I took the profits at 24.20 because I didn't see a huge reaction, and because I know the 2400 is just a huge number. It just cannot erase that. So neutral, Dave.
All right. Okay. All right, Christian. Before we go to you, Christian, when we get to the next segment where the question is about developing events, feel free to share your charts at that point in time. But Christian, do you same question?
Yeah, sure. And I'm going to follow Anka's lead with just kind of going a little bit more in depth into my answer here. But I really liked everything that Anka had to say, and I agree with most of that. My feel for the week is higher, but I would say probably, I'll go with like a 10% confidence on that. And the reason being is, I don't see a lot of events, market moving events for this week. I have had, I read a newsletter every weekend where I kind of, really try to put a lot of the puzzle pieces together, and it's really like a mismatch right now. One of the things that I don't like in the market right now is kind of what we saw towards the end of last week. We had that short-lived bounce in the beginning of the week, and Thursday was a repeat of the previous Thursday, and there was some technical damage done. I will also pay attention to large caps, but I like to look at a lot of other indices. So small caps, I always feel is a leader for me. They will sometimes kind of reveal what the market move is ahead of the large caps. So the small caps breaking the 200-day moving average is a big deal for me. They need to reclaim that sooner than later. If not, it is what it is. When you break the 200-day moving average, and when you've held that for a long time, it's a breaking of an uptrend. Could it reclaim it very quickly? Absolutely. But we're also seeing some other cracks. If you look at the biggest weight in the small caps, it's the banks. What are the banks doing? The banks are also breaking down. The KRE, which is the regional banking ETF, the KBE, which is all banks, have also broken the 200-day moving average. That's not bullish. So some of these things are starting to break down. If you look at transports as well, that has me concerned as well. That had a quick bounce last week on the 200-day moving average, but that has also broken the 200-day moving average. So now that's the negative. The positive, we're starting to, you look at some things that, especially kind of driven by China. I mean, copper is raging right now. Zinc is raging. So a lot of the industrial metals are raging right now. So those are bullish. That's not bearish. So you've got some really good things going on. Iron ore prices are ripping as well too. So these are not bearish things going on. It just kind of goes back to, and I think Anka talked about this a little bit, it's the seasonality of the year, right? I mean, everybody knows, everybody's heard August and September, lighten your portfolio. It's going to, we're going to get some market weakness. So it's almost a self-fulfilling prophecy. We've got a little bit of that weakness. Can basically, and why I'm, that said, why I still say positive with a very small confidence of 10% is because it's only going to take one day. For instance, today we started lower. Today's going to be an important close because we're basically back to flat. The Qs are trying to get positive here. So if we can get a reversal day, this could be the end of it could be a very quick end to the market dip that we've seen in the last 2 weeks. But I have to let the price, let us see the confirmation first, which is why I'm trading very light right now. I'm more of a swing trader than I am a day trader. I'll pick up on, volatility when we have it and trade, try to be as objective as possible and trade both sides of the market. But I still see, when you look at the global indices, I look at 39 different names on my international watch list, and only one of those have broken the 200-day moving average. So globally, we're in uptrends all over the place, and I'm really looking at emerging markets. So I'll get into that on the next question, but that's a little bit of backup for my feeling for the week.
Christian, are those mostly ETFs or those individual issues?
Those are ETFs. So a lot of country-specific and multi-countries in those 39 different names that I look at. Cool.
Well, you stole a lot of my thunder, but that's okay. That's what it is. Oh, wait, Michael, let's go to you first before we go to me. You know the routine.
Before we come back and continue to trump on your thunder. My view, I kind of went and I looked at, when I take a look at equity markets, I tend to then focus on Elliott wave. And because equity markets tend to follow Elliott very cleanly. So I looked at the S&P, and my stance is that it's got to break above 2430. If it breaks above 2430, I think that clears the path for it to have an up week. The whole process hinges on 2430. Failure to break that reverts the pattern from what I can see right now is a nice clean 3 waves down, which is, if it holds this, would be corrective and suggest that the market will eventually move up and in the S&P move to new highs. We're not that far away from it, and it could easily be accomplished. Failure to break back above 2430 and hold above that level would really suggest that we will not get a higher close this week, and that we will end up meddling around pretty much where we are. Taking in what's already been given as observations of the market and the seasonality and where we are, it really is a coin toss. And so that's why I'm going to give the market a 60%. I'll go 60% higher because I think they will retake 2430 and then eventually just work their way up as political things kind of settle down or fall out of the front page of the news and more, it's kind of a backstory now. Not that there isn't enough already existing that we can take 1, 2, or 3 and go like, hey, the ghost is gone and this thing's heading to the, down the sewer. It hasn't happened yet. I don't see algorithmic traders really doing the reversal. You're putting more directional trades on to go down. So say higher, and I'm going to go 60%.
Okay. I do have a question for you. I'm not a big fan of Elliott. I did have a client once that absolutely printed money with it, but what I noticed was he was in phase with a trend. That was during the 2007, 2008 bear market. He was trading a lot of my momentum signals, and I often preach everything works better with trend. And I'm guessing he made a round trip because I never heard from him again, because as the market started going straight back up, he remained bearish, waiting for the next big wave. So my question to you is, do you fight the trend if Elliott is saying something different, or what do you do in those cases? And that's where I see a lot of people get burned, but I was just curious as to how do you handle that?
You're right. People do get burned, and I often will say that it's very unfortunate, because I think there are a lot of people that use Elliott, and when they start making money, I found that more people go to Elliott when they're bearish. What I don't realize is that Elliott and its patterns, they have a start and a finish. And when that occurs, and it's more complete on the next level up, right? I mean, you do Elliott on a tick chart, but you're going to be switching your strategy often, because
right.
the market's going to move. But it still will do the 5-wave pattern, three-wave correction, 5-wave, etc. And then when it's completed that bigger one, you must move along with it to the suggestion that it's like the market's going to reverse, the market's going to do this now. And I find that people, they get stuck because they don't see anything necessarily that's going to convince them that the market should be bullish or bearish, depending on where that reversal is occurring. So I agree with you. I saw a lot of people get caught in 2008 because they didn't see that the market could turn, because they were still focused on this, which was very real, economic crisis that really was overtaking the banks, overtaking the big brokerage houses, et cetera. But when that switched, boy, you got in the way and you got slaughtered.
Yeah,
Same
absolutely.
thing happened in the first Gulf War. We all waited and waited and waited for that Gulf War. It started, and what did the market do? Zip down in Japan and ended up 1,000.
Yeah, I remember gold was up whatever the next day.
And collapsed.
Like at 4 a.m. or whatever. Then it just absolutely collapsed. Yeah, it was fascinating.
As did volatility, by the way.
Yeah, absolutely.
Oh. So
okay.
I'm going to stick with my call.
Okay, cool.
But it has a stipulation, that 2430 level. So.
All right, good. I guess I'll go ahead and kill a bird with 2 stones. What's the saying? Kill one bird with 2 stones. I'll go ahead and share my screen. People, I often say that you could only predict a short term, as I said earlier. Sometimes confuse that with you could always predict a short term, which you cannot. And I think it's a difficult thing to try to predict the market unless you have a specific setup. But one thing that has me concerned right now is the moving averages have turned down in the S&P 500. And I'm going to dovetail on some things that Christian said too. But if I like to look at what I call the bow tie moving averages, and when you get a really tight cross coming off of an all-time high, pay attention. If you look at the weekly signals, pretty much every major bear and bull market over the last 50 years or so was started or with this type of signal. Now, keep in mind that an indicator doesn't indicate anything. It just tells you what's already in the charts. So it's nothing magical about it or any other indicator as far as that's concerned. But we are on the cusp of a bow tie down on a daily. If that happens on the weekly, it could get pretty ugly pretty quickly. Usually, if you've been coming to these shows, I've been bullish for a long time, and hopefully, as Anna pointed out, we're still in a longer term uptrend. Hopefully, that'll continue to play out. But what I'm seeing now is a bit of a transition, a bit of a rollover in the overall market, and we're still not that far away from all-time highs. So, as you guys were pointing out, a few big up days would make all the difference in the world. But so far, that hasn't happened, obviously. So this has me concerned. I guess let me give my prediction in first. I'm going to say down, but I'm not super confident because I think we could bounce. So I'll give that about 50%. But if you take a look at the Russell, which I'm glad Kristen brought up, it's if you take a look at IWM, you'll see that we already had the bow tie down there. This is a 50-day moving average for reference. And you see this little trend line I have here. When those moving averages come in sharply against that 50, that's usually a sign that the trend may be turning. And the trigger would have been down here about 130. You can see that triggered late last week. And if you back the chart out a little bit, the problem is that the small cap stocks just really haven't participated much in a long time. And what happens is if this market does drop the more it drops and the further it drops, the more pressure are going to be put on people who bought somewhere doing this consolidation. And people buy and sell stocks for a variety of reasons, often having nothing to do with the underlying market. So if this Russell continues to drop in here, then that's going to put more pressure. And this is, at the least, is going to become a lot of overhead resistance. So the longer that it stays below this overhead supply or resistance, however you want to call it, I think the more trouble the market is in. And without going into too much detail, Kristen pointed out a lot of sectors are in trouble. And if you take a look at just the major sectors and sort them by the major groups, now you've got aerospace doing pretty good in here, and I don't know if it'll keep up. But as he pointed out, the banks are beginning to break down in here, especially the regionals, and computer hardware breaking down. And a lot of these other areas that aren't breaking down are certainly losing a lot of steam in here. Major drugs have broken down. And to just try to wrap it up as quickly as possible, if you go through a lot of charts like I do every day, I like to look at about 2,000 charts every day. One of the things I've found that in more recent times, we've had a lot of debacle du jours. And I just mean, by that, I mean issues that were getting torpedoed, such as Teva Pharmaceuticals just recently. And that brings down a subsector and has a negative influence on other stocks within the subsector. And that could begin to bring down the sector. And then as more and more sectors get hit, it could weigh on the overall market. So I wouldn't rush out and make any big picture predictions up or down at this point. I think the signs are there that the market has lost steam. Who knows? This September, October, the volatility will come back in. We might just go blasting higher, and I hope we do. And I'm still 100% long, but I have stops in place. I'm keeping an eye out for shorts. And worst case scenario, I'll just sit on my hands and let the market prove itself one way or the other. As a trend follower, you're going to be a little late to the game, and you're not going to look smart. And you're also, and this is what a lot of people forget, you're also going to overstay your welcome. So when I finally do get stopped out of these 3 longs that I have on right now, I will give up some of those either open profits or they will turn into an open loss before I'm stopped out, but I'm okay with that. So anyway, I think we're at a point now where we have to pay attention, but there's nothing drastic that has to be done. So again, honor your stops, be selective, and it's really okay to sit on your hands. Cash is not trash. If I never had to make another short trade in my life, that'd be fine with me, but that's just not how markets work. And I think the importance of shorting, not that it's the only way to make money, is when a market goes down, but the importance is it helps you to see both sides of the market. The money managers that I'm friends with that are long only oriented, they always kind of see things as glass half full as opposed to half empty. They don't really see both sides of the market until it's a little too late. Not to take anything away from them, but I do think that playing both sides of the market, not that you're going to make that much money on the short side because it's hard, it does help you to see both sides. So I think that's definitely a positive. All right, Anna, let's go back to you. Anka, I'm sorry. Please share with us specific reasonings you think the S&P will be totally neutral this week. And I think you already did that, but anything else you want to add on that?
Yes. Let me share some my charts. Okay. I'm not really using Google Hangouts a lot. So, all right, screen. Okay, I guess this is the screen. Okay. I guess if you guys see charts, this is it of the SPX. All right. So my reasoning for being neutral is the fact that, and Dave, you've mentioned the fact that we're trading below the moving averages, and obviously this is an indication. I'm not a big fan of moving averages, but I do have them, and I do take into consideration where price is trading in relation to the moving averages. But what I was saying earlier when I spoke about the key levels that I'm watching is I'm looking at this 2400 level right here, which has been tested multiple times. First time it was tested here in May, at the beginning of May, actually May 9th through May 17th, and then it popped a little higher and then revisited this area of minor support right here. Once again, this resistance created the shelf here through the month of June that we actually bottomed out, pivoted. The price pivoted in June, July, end of June and beginning of July, from which we challenged the prior high, continuing higher, and then this pullback this pullback came very, very steep the first time. We did have a pop here, although everybody was expecting a pullback into the 2450-ish area, and it came even lower than that. It came close to 2437 area, from which it bounced again and it slipped again. So the overall pattern in the S&P, we're starting to have these declining tops and declining bottoms, which is an indication of a downtrend that is forming. However, we cannot ignore the fact that we are so bullish on the weekly chart. We're extremely bullish on the monthly chart here. But once again, this is, in my opinion, this is going to be the line in the sand. We are also going to trigger a monthly sell below 2400, and that might bring more selling pressure in for a further correction. Right here, we're still into this 20-period moving average, so the price is still trading here. You can see a little bit of green from today on the weekly chart. So we're still trying to hold this area, these lows right here. So the price is literally struggling, and I think it's only typical for the price to struggle. August is not one of the greatest months to be very active in trading, and it's great to take a step back, start scanning, see what opportunities out there in other sectors like the oil sector or the banking sector or the housing sector, or when you do a sector analysis and see where there might be any opportunities and save that risk for the latter part of the year, which is one of my favorite parts to trade. It has been like the last quarter of the year has been one of the most profitable periods ever since I have been trading. And literally in the last quarter of the year, I've made most of my profits, and I've literally scored more than I have accumulated in Q1, Q2, and Q3. So the last quarter for me is one of the strongest quarter. So what I'm doing is I'm taking a breather, taking a step back, taking it very, very slowly, because I still think, and like very well, Christian also has mentioned, and Michael, amazing analysis as well. And we are, and I loved his comments, and it's such a privilege to be surrounded today by you guys. It's just amazing. And 2400 is the support level right here. Like I said, if this number is going to be breached, we can see a more steeper correction, possibly into the 2330 area. We do have this 200 moving average, which is rising at this point, and we do have a resistance point. A support point right here at 2350-ish area, 53. And then this is going to be the area that I'm going to be looking for. So for the rest of the week, we may get a correction, based on algorithmic trading, maybe perhaps trying to challenge the 2410 area or the 24, let's say 15 area, but I don't see a lot of selling pressure coming in very soon. I don't see a lot of buying pressure coming in again very, very soon. So we just need to give the market a little time, which is to me, it's normal, and it's great to catch our breaths and take a step back and relax a little bit and take it a little bit easier, because we're going to be heading towards a very active year end.
Anka, you ever think about taking 3/4 of the year off? I mean, that would be pretty awesome.
I have about 2 years ago and 3 years ago, I did take the second and the third quarter off. I came back end of September, and I did a great job. And I actually didn't. I just took the time off, believe it or not, for my clients and from everybody. I just took the time off, and it came back, and it worked for me.
Good for you.
So.
All right, Kristen, you're up next for your answer to number one. Please share what specific reasons you think the S&P will be headed higher, or direction you choose, I'm sorry. And then, you were 10% higher. And feel free to share a chart if you would like. And then also, before we go to you, Kristen, if anyone has a trade of the week, start thinking about that now. And maybe you could share your chart and give us a little background on why you're thinking about it. All right, Kristen, to you.
Sure. Thanks again. And so I mentioned a couple reasons of what my thoughts are for the week and during the last question. But just to reiterate, I am neutral. It's also, very much because of the the eclipse, as well as in years ending in 7. No, I'm just kidding. I had to throw that.
You had me for a second.
This is too easy, right?
Michael and I were talking about that right before we got started, so it's kind of funny.
Well, listen, you gotta have a little fun. So yeah, so just I mentioned a couple of the areas, and again, I really liked what you guys had to say. I very much look at moving averages as well. Same thing with David. It really kind of really helps me find the trend. So when I see things breaking, certain moving averages, that's a great place for me to kind of draw the line in a sense. We haven't talked too much about a systematic, having a trading plan, but you have to do these at some places. You don't want to get hurt. When there's, it seems like we are in a little bit of a correction now, whether it's going to be a couple percent or a little bit more than that. You have to be able to draw the line someplace. So moving averages really, for me, give me a great place to say, hey, you know what, hands off here, let's reduce some risk, and we'll reassess. So I think that's basically where I am right now. I mentioned I don't like the small caps, just as Dave, and same thing with the S&P. And I think Anka mentioned this as well. Making lower highs and lower lows is not a great thing. But if you look at the bigger trend, and I think already mentioned was the weekly chart, these things are still kind of on cruise control and moving up. So I do believe we're in a temporary setback for now, and just looking at one chart that I've got in front of me, and these are a couple other more sentiment indicators that I'm looking at. This is the put call sentiment, which you could see every time we've had a huge spike up in this put call, it's been close to a bottom, or especially in an uptrend, which is what we've been in. When we have this huge spike in put to call activity, it usually marks as a we get a reversion from there. So we've had 2 in the last week. So we just have to kind of wait and see how things play out. But when we get so much of defensive buying, put buying going on, it usually has signaled a reversal at some point. So it's happened a couple of times here. It's not guaranteed. No indicator or sentiment indicator is guaranteed, but I think it's pretty good that we've got some fear in the market. And then if you look at things like the fear and greed index, the damn thing's out of 17. So we finally got some fear. I mean, just a couple weeks ago, a month ago, even, it was at a 74. So we were real. The dial was all the way to the right. I think we were a bit too bullish, and there wasn't enough fear in the market. Well, now we've got it. So I think now is the time to just kind of, and this is easier said than done. It's really difficult as an active trader. It's one of the hardest things that I find to do in this market, is just to kind of sit on your hands a bit and be patient and wait for things to start to move back up again. So I think that's the place that we're at right now. Like I'm really, kind of getting excited at today's price action, although we just kind of fell out here a little bit. But hey, if it doesn't happen today, so I'm looking for a reversal where we went lower and we're going to finish higher. If we don't get it today, so be it, and I'll continue to kind of sit on my hands and wait for things to turn around, because we really don't know. You got a lot of people on vacation. You don't know when the buyers are going to return, but I'm going to continue to watch the tape, read the tape, and be alert as to when it happens. But until it happens, I think for the most part, trading very lightly is the way to go, and especially in August and this time of year where you've got a lot of vacations going on through the end of August, is the place to be. But I think I'm starting to get excited that we're going to possibly make our way through this, and there's going to be some good opportunities for the rest of the year. So if you're patient, I think we're going to see good things. But again, just as like Dave said, it's tough to make long-term predictions. I'll let the price prove that to me before anything else.
Yeah. And as you pointed out, I think it's either Ken Lambert or his predecessor, I think it was Steve Edmondson, said doing nothing is harder than it looks, and it really is, especially if you're a person of action. And previously, if you have a previous successful career, I mean, that's what I see all the time. People are very successful, work hard, grow a business or whatever, and then they come to trading and they just can't sit there and not do anything when there's nothing to do. Michael, let's go to you next. Same question. You need me to reread it?
Question, I would, again, just use, it's like I'm using Elliott Wave and I'm using the daily chart. It's at its make or break point. It's kind of futzing around right below 2430, but it's not really heading stronger back towards that low.
What's your count? What's your count?
ABC off of the high at 2488. It's ABC down.
ABC down.
Which to me is correct. Now, when I say 2430, if it breaks above 2430 under Elliott rules, a fourth wave, which is what it would be doing right now, cannot overlap the price territory of wave one. Now, the rules are the rules. You don't break them. If you break them, you're going to get yourself in trouble, which is part of my answer back to you when you were discussing about people that try to use Elliott and then get caught up in doing it wrong.
Yeah.
The rules are very simple. There are 4 rules and there are like 10 guidelines. So you don't break the rules. And when you do, it ceases to be Elliott Wave. It's now.
Have you written any on this, Michael? Have you simplified it?
I published years ago, together with Dan Ascani, who actually taught me, along with Robert Prechter, taught me Elliott. He and I did a monthly newsletter, and we also did daily analysis and daily print. But since then, no, I haven't. And I probably should, which has always kind of been a goal. But because my website is day trading, to throw a long-term view.
Yeah.
You know, I don't want to start confusing people if I'm telling them, look, I don't care about the who, what, where, when, or why, and then suddenly putting up a post that says, well, actually, I do. You know?
I gotcha.
But it's more, if you're looking at something on a long-term view,
yeah,
then yes, you've got to have supporting evidence. So again, everything that's already been stated, I really do believe that the markets remain bullish. And we're finishing up, you know, we'll be finishing up third quarter in another month. So I'm going to ride along with Anka and with what Christian's already said. It's like, as we start entering into that fourth quarter, you know, the big players, the big hedge funds, the big brokerage houses, you know, or just the big merchant banks, they're still in this game.
Yeah.
And so we have that whole year-end trading. And so I'm going to agree with what Anka said. It's like, hey, just kind of keep your hands in your pockets unless you've got a really solid trade that you want to do, and hang out for that fourth quarter, because I agree with her. I think it's going to be dynamic.
Yeah.
With what we have going on in our country, with what we have going on a global stage, add that to everything else, and I just think it's going to be dynamic. And so my preparation is just to get people prepared to come in every day and you just trade.
Right.
Why? And just trade that number. Because the opportunities are going to be vast, and they're going to be across a wide spectrum of equities, of options, of futures, everything. Everything is going to have to react.
Yeah.
That's what I feel is coming. Now, for right now, I just think it's like, yeah, if it goes up and breaks above 2430 in the S&P and it holds above that level, and that's also basis the future, then I do see the market working its way higher.
Yeah, I mean, I'm hoping for a big blow off towards the end of the year. That would be awesome. I'm just a little nervous at the moment, and might have to sit on my hands a little bit, but hopefully that will shake out. I know you're not supposed to use the word hopefully.
Well, part of it, Dave, is that when we kind of get that narrower focus going, where if it moves down to 2400 first, it's just actually completing a corrective phase. It doesn't necessarily really change that view that the market will continue to, you know, pick up a rally. So, you know, I like having 24 as a floor, and then as a very short-term marker, that 2430 level.
Or your core positions, I know we're getting a little long here, but are your core positions based on Elliott? I know you're day trading, is it? But do you have core positions based on Elliott?
My core positions are actually in markets where I believe that are giving much stronger signals that doom is hanging out there. and just waiting for the appropriate time to start. My core positions are in bonds and gold.
Okay.
So if I were to get long, or core position in the equities, I probably would have to get a toupee. Because I'd be pulling out my hair. I'd be pulling out, because I don't have the patience to wait through that nonsense, like for whatever the reason is. Because I think my opinion on over-evaluation is much stronger is on golden bonds.
Gotcha. Okay, Anka, let's go to you. The question of the week this week is, what company/sector/indices are you most excited about for long-term market growth, and why?
All right. So, all right, I'm going to start sharing my screen. Okay, so you've mentioned that I do have a stock that I'm watching, and I absolutely love the setup. Not necessarily extremely bullish because of the environment that we're in and because the market is the way it is, and we have been talking about it for close to an hour. But I am looking at Costco as a possible long over $161, and this is the area that I'm looking at. Obviously, it is a swing trade. I would love for it to break this resistance area. I would love a crossover to happen here. I would want the price to pop above this 200 moving average, possible correction into the 160, possible move up into the 160 area, possibly higher for a core trade. But I do see a definite reversal in Costco right here, and it has triggered actually a buy, a technical buy here on the monthly chart. So I do see it higher, at least, like I've mentioned, at least into the 170 area, where it's going to hit this congestion on the weekly chart. So I do love Costco. I do have a swing trade in that I actually took today in natural gas. And this is the area where I bought it into the a little bit, the precise number is 293. And it ran really great throughout the day today. My first target is 3. My secondary target is 3.05, between 3.05 and 3.07. I'm not going for huge targets, like I said. I'm doing something that is like very conservative for this time of year. So it wouldn't be surprising if within 1 week I'm going to have only one trade, or perhaps 2 trades, or perhaps even none, because I think that capital preservation should come first, and that's the only that is your only motivation to grow your account. So think about it twice. Don't feel the urge to have itchy fingers and just, oh, I got to take a trade now. I had a trader that actually attended one of my webinars and I mentioned the fact that you have to take it down a notch for the month of August, and he said, I mentioned the fact that if I'm a very aggressive day trader when I day trade futures, but I never take more than let's say between 1 and 3 trades. But to me, in my opinion, that is an aggressive trader when you're talking about futures, because I super hyper calculate my area, so I have to have everything in sync. So for me, within 2 hours to take 3 trades, that is a lot, because I overanalyze everything, because I want to measure my odds before I get into a trade. And the trader replied to me and he said, no, not if you want to make money, because if you want to make money, you have to take 10 trades a day. I'm like, oh my God, like you have to take a trade? That is one of the biggest mistakes. No, you don't have to take a trade. Trading less is actually making more, and getting focused, to me is number one. And obviously capital preservation, because even though commissions in the futures market are way less than in the stock market, they rank up. So if you have 10 trades, needless to say, if they're all losers, you might run into a big issue and a big problem right there. And I think that moving forward, and like Christian and also Michael has stated, look at the bigger picture. Don't narrow down. Even if you're a day trader, don't be stuck to a tick chart. Don't be stuck to a 1 minute chart or the 2 minute chart, because these are the time frames that are getting all the traders in trouble. You have to be accurate. You have to be an algorithm to nail that setup. On the 1, on the 2, you have to have a precise knowledge of how to correlate these higher time frames with the smaller time frames in order for you to get that small risk for a 2-to-1 or a 3-to-1. Well, I think I might be kidding if I'm saying 3-to-1 reward to risk, because that's like not attainable in this market. But if you're getting a 2-to-1, you call that day a phenomenal day. That's in my opinion. So I do have an active trade in natural gas. I do like Costco. Also, I'm not a big fan of OIH. But it is approaching here on the weekly chart, and I've noticed this by analyzing these by analyzing the market this weekend. It's approaching this double bottom on the monthly chart. Obviously, I'm sitting on my hands, not doing anything. I'm not going to say long or short, but I'm saying that we might expect some kind of reaction at the $20, above the $20 area. So this is what I'm literally watching right now. And I love what Michael said, because bonds have been on fire. And because I'm a futures trader, I love to look at bonds as well. And I still think that bonds have a little bit of juice into the 156 area as well. And then pretty much we're going to be hitting that resistance area. But yeah, I have been long bonds as well. I love gold as well. I also have a YouTube channel. I have been mentioning the fact for over 2 months now that gold is reaching that swing target of 1,300. And these two, the bonds and so Michael, we're on the same page here. Bonds and gold I have been bullish on. And these are the only things that have been really running and without severe pullback and those really wild swings. So they have been more on the moderate side. So that's my take. So basically natural gas long, gold bonds long, and also I'm watching for reaction in OIH and Costco long. That's it.
Can't hear you, Dave.
Hey, Dave, I think you're muted.
Yeah, there was no sound, Dave.
Okay, I think I'm back now. Christian, let's go to you. And the same question: what company sectors, industries are you most excited about for long-term market growth, and why? And then, if you have a trade of the week, go ahead and give us that now.
Yeah, sure. I'll go right to what I'm looking at, and yeah, so this is perfect because Anka was talking about getting a little bit away from analyzing ticks and so forth and really small term stuff. So I'm looking at a really long term chart of EEM versus SPY. So this is going all the way back to 2003, where emerging markets were outperforming U.S. markets, SPY. And then what you started to see here in 2010 to 2016 is emerging markets underperform the U.S. So what we've got here, and so this is the downtrend line, but you can see it's been basing and it's broken. So again, emerging markets are in the numerator, SPY is in the denominator here. So if you kind of look at a 5-year chart and zoom in here, you could see this base that's been happening. You could see some things happen in the last year, like a golden cross where the 50 days moving above the 200, as well as the 100-day moving average. You scale in a little bit further, so you could see that base that's been going on, and you could kind of see this is starting to break out. Again, so we had a little bit of a breakout here going back to, I guess, the start of the summer. But you could see that emerging markets are really starting to outperform here. So I like to always go underneath the hood and kind of see what's going on inside the emerging markets. And one of the things that's just been absolutely on fire is the Chinese internet companies. I mean, you could see it again today. Look at this Wuba that's up 20%. This has been one after another since since this earnings cycle happened, the U.S. names haven't really performed that well after good earnings, but the Chinese internets are doing really well. We saw what Baba did. We've seen a couple other small cap names really do well in this China internet group. So that's really strong. So I like this K-Web ETF, which is all of them, all the Chinese internet names. And then I like, this is all basically, it's a basket of ADRs for the most part. There are a couple locals in here, but, this is a really, really nice looking uptrend. Where's the weakness in this chart? Maybe a couple days, but look at how far it's still above the 50-day moving average. So, if you're not into this trade, it is tough to kind of chase something that's that far above the moving average. I would lean a little bit towards, some things that have kind of pulled back a little bit is Singapore, which is in the EEM ETF. So there's a small portion of that, but Singapore, which is the EWS as in SAM ETF, if it holds the 50-day moving average, maybe wait for an MACD crossover for confirmation, which is kind of what I'm waiting for, a little bit of bounce of that 50-day. But if you know exactly where the trade's not going to work. If it breaks the 50-day, get out. But I think it's got a decent chance for a bounce. It's been doing this every time it's hit the 50-day moving average. It's bounced. EWH, which closely resembles that Chinese internet group, same thing, right on the 50-day moving average. So I like where these are right now. And then I talked in the beginning. I talked about what the metal space is doing, which is absolutely on fire. If you're looking for a little bit more exposure to what the metals group is doing, you look at Latin America. 52-week high today. Nobody's talking about it. You drill down to some of those Latin American countries. Look at what Peru is doing. This is EPU. This is not a real name to kind of play in options, but you could see it's way far from its peak that happened back in 2015, 2016. So this thing is just starting to break out. I like EPU. I like ECH, which is Chile. And if you don't want exposure to those particular names, if you kind of like everything that I've been talking about, you could just do emerging markets because there's a little bit of all those countries in EEM. And if you want to be a little defensive, for right now, you could basically say, hey, I'll be short SPY and long EEM, and wait until maybe if SPY gets back above that 50-day moving average, like get rid of the short and kind of just stick with the long EEM. So that's what I favor right now. Yeah,
good stuff, Christian. Good stuff. I appreciate that. Michael, let's go to you. Let's go ahead and combine those two questions. What companies, sectors, industries are you most excited about for long-term market growth and why? And then if you have a trade of the week, feel free to present that now.
Being that my focus is day trading, I actually don't do those longer-term plays, except I did one in natural gas. And Anka, you and I are just like on the same wavelength there. My call was like a break above 290 or 2.90 to go ahead and start gathering longs. That again was today, but my target is 312, and again that's an Elliott calculation. And so, but I feel that that's how it's been trading, and I think it could actually go back up and test that area. A break above it would be extremely bullish for natural gas, which it may do because it just depends on what people, how people are going to interpret any weather reports for fall and winter. So again, I like natural gas. So I really like the trade that Anka put on. As far as stocks, I don't have anything in stocks right now. And the only way that I would is if I was getting stronger confirmation that everything was kind of reaching a top. And when it does it sporadically, where the S&P will hit a high, the Dow might hit a high, the NASDAQ hits a high, but they're not doing it congruently. They're not doing it together. It just kind of really throws any analysis kind of to the sidelines a little bit and looking to start putting on a short or putting on shorts. If I had to go look at particular stocks where I might be looking, I probably would look at the banks. Really overcooked, and I think that the reason that people are moving into long positions within the banks is a little bit off kilter in my thinking. For shorts, I like Bank of America, I like Citigroup, and my all-time favorite, of course, is Goldman Sachs. But you have to be very, very careful about how and when you want to get in and what you're using to get in.
Okay.
If you just decide that you want to be short the stock, I think that's an open invitation to please steal my money. I do. So, but outside of that, I really like coming in clean, fresh every morning and tackling these futures. And my primary futures that I really trade right now, like I said, are crude, gold, the NASDAQ, and I really also like the 60 and the euro. All of them have increased volatility, so you're going to get your moves during the day. For example, you know, in crude oil, we have to remember crude oil per tick is $10 per future. So you can pick up. If you get 10 or 20 ticks, it's $100 to $200 per future. And we're seeing 30 to 40 to 50 tick moves intraday here. Solid. I mean, without interruption, they just kind of do it. Gold flips in dollars. The NASDAQ flips in dollars. So it's not like it's just moving $1 and it's taking 20 minutes to do it. It's moving $10 to $20 and it's taking 10 minutes to do it. So I think that there's a lot in there to do intraday. And gotcha. you can make solid money. So those would be my trade recommendations. Switch to day trading. I'm going and have some fun.
All right. I'm going to try to move along quickly here simply because we're running a little late. In answer to the question, what companies, industry sectors am I most excited about longer term? I'm going to say none. And instead of going through a long diatribe of why, I wrote a blog a while back that said, do you know that there are no good longer term investments and cash is not trash? And people think the market always goes up longer term. It doesn't. And there's a lot, I flesh all that out in a lot of detail here. Now, that does not mean that I won't stick with a company as long as it moves in my favor. We got triggered in way back here in, I think, January on this stock here. And so far, it's up about 100% and change, or 160%. I forget exactly how much. It's in a little bit of a pullback now. I think that's actually a healthy thing. So maybe I'm talking my position a little bit, but I think if you're looking for a trade on a little bit deeper pullback, I think it'd be worth a shot. I have a pattern called a TKO, trend knockout. And if you go to my website and click on videos, you can watch a video on that. As far as a trade that's actually set up now, we're long this stock. This is an IPO. When the market gets a little iffy, I like to look at more speculative stocks because they could trade contra to the market, or if the market heads lower, they could trade higher in lieu of the market. I want to look at that. So I would say a trigger of about 30 on here. Some research that I've done has shown that when IPOs start making new highs, a lot of times you'll get follow through. You can't just buy every stock that's making new highs, but with IPOs, there's definitely something there. So in addition to triggering a pullback, it would also trigger an entry on a new closing high on this. So I'd keep an eye on new closing high on this RDFN as a potential trade. Since we have ran long, well, I guess let's just go ahead and wrap things up. Anka, since we're running a little late, let's just any closing thoughts quickly, and then anything else you want to tell us about TradeOutLoud.com?
Okay, so I think that everybody that is tuning in should take it, and this is my take, should take it very easy this week. And like Michael said, it's like, Michael, we're on fire today. And like Michael mentioned,
I'm have to separate you two.
I know. It's like day trading is the way to go. Go for small moves, go for scalps, measure 3 times and then take the trade once. And I think overall this should be and this type of trading will continue into September as well, until at least after Labor Day or until earnings season starts. So this is what I've experienced in the market. So I'm going to start being aggressive starting with the new earnings season, when the new earnings season is going to kick in. A little bit about Trade Out Loud. For those of you that are interested in day trading futures, you could visit our website, tradeoutloud.com /futures. We have a class that is starting next Monday. You have there plenty of information. You could also email me at info@tradeoutloud.com for if you need to if you need more information. And also we run a signal service for day trading and swing trading. Also visit our website, tradeoutloud.com for more info. So thanks so much, guys, for having me here today, and it was a pleasure. I hope we meet in this round again soon.
Yeah, glad having you, Anka. All right, Kristen, any closing thoughts?
Just more of what I said already. Just, you know, kind of sit and be patient here. Wait for the signal. Don't rush in here, and you know, be nimble in this market. I will just reiterate: I have a larger than normal cash balance, which makes me feel really comfortable in this market, and not looking again to rush in, but just waiting for a couple signals, and we'll go from there. Tribeca Trade Group, you can get 50% off the first month. We have a live trading room all day long, which is great for active traders, full-time traders. If you're a part-time trader, we also have those services as well. I send out alerts on all the trade alerts I do for both options and cash. As you could tell, I'm quite a trend follower, and so if you're a little bit of a slower mover with cash positions and long-term positions, this is good for you as well. And yeah, that's it. So TTG is the coupon code for half off the first month of our trading room. Thank you. Thanks again. I love being a part of the panel, and I'll see you guys next time around. Thanks.
Yeah, great to have you. Michael, to you.
To wrap it up, I would just to say thank you, Dave. It's always fun when you're hosting, and moves right along. David, thank you for getting in contact with me and asking. I always appreciate that. As far as logical signals, the website has finally been moved. Someone actually stole it, so I had to go get it back. Moved it to the new server. That part's successful. And so I'm going to begin to start my updates again. So continue to just check back, www.logicalsignals.com. You can contact me directly through the website. Feel free to do so. And I will revamp the coaching page so I can put my new programs into play. And so any questions, please feel free to contact me. Otherwise, happy trading, and just kind of, it's like, follow the trend. I am a volatility trader myself, but volatility does not necessarily have to come just in options. You can have volatile pricing in all of these futures markets. I'm having a blast in both directions.
Cool.
And end it there.
Well, thank you, Michael. I'll keep it short and sweet. I can be reached david@davelandry.com or through the contact form on my website. I have a plethora of information on the website that's free to get you up and running. And I think I have, last count, about 1,600 YouTube videos. So you can check out my YouTube channel. All that information is on my website. Obviously, I want to thank you guys. I'll let Dave Kosmider close the show, but I just want to thank you guys for coming. And also thank you, David Kosmider and Timing Research, for inviting me back to host this week. Back to you, David.
All right, thanks everyone. Just want to remind everyone watching, be sure to hit the YouTube subscribe button and the bell icon next to the subscribe button if you haven't yet, to get updates on future shows. Also, Timing Research will be co-hosting, along with Follow Me Trades tomorrow night, a brand new show starting at 9 p.m. Eastern Time. That's on August 22nd. Called Analyze Your Trade. If you register for that, you'll be able to submit your top 5 symbols to be analyzed live by experts, including Dave Landry here today, as well as Bennett McDowell, Corey Rosenblum, and Dean Jenkins, who will be moderating. So if you want to find out more about that, just go to TimingResearch.com, and there's a link on the sidebar of the pages now, so you can sign up for that. So I hope you can join us. Be sure to join us next week for this show. Larry Gaines and Dean Jenkins will be here. And just want to thank my guests for this show again. Anka Metcalf of TradeOutLoud.com, Christian Fromhertz of TribecaTradeGroup.com, Michael Filighera of LogicalSignals.com, and Dave Landry of DaveLandry.com. Thanks, everyone.
Thank you, Dave.